Welcome back to Market Day Report. I'm Tommy Grisafi. Well, the markets haven't disappointed. We're seeing all types of volatility as we come to July 1st. Seeing volatility as these funds move around money. And speaking of money, let's see how your money's doing if you're involved in production agriculture. Folks like to talk corn, so let's get to it. SEP corn, 404, down 3.5. Dees corn, 418, down 2 3/4. There was a part of me that thought maybe we'd see Dees corn trade up on the day. Well, it's not over yet. We'll check back in these prices in a little bit. Soybeans now. SEP soybeans 1102, still up in the day, up 2 3/4. No soybeans 1106, up 2. Seeing a little bit of volatility there. You want volatility? Here we go. Wheat. Wheat is the favorite today. SEP wheat 585 1/4, up 12 cents. Dees Board of Trade wheat 608.5, up 11.5. Moving next to Kansas City. Kansas City we go. SEP KC 594 3/4. I'll round it up to 595, up 8.5. Dees 611, up 7 3/4. Looking at those deferreds, they're trading 10-20 cents higher. Is that a high enough price if you store your grain till March or May? 631. When you look at May 25, up 7 3/4. Last but not least, we move to spring wheat. Then we'll bring our next guest in here. SEP spring wheat is the winner today. 628 3/4, up 15 3/4. Dees spring wheat 647.5, up 15. Last but not least, we got to go to cotton. We just had a good southern farmer in here, and we were talking cotton. Cotton 72.13, up 15. Dees cotton, a little improvement since last time, 73.06. Well, we bring in next Dave Chatterton. He's coming to us live from Champaign, Illinois. How you doing, Dave?
Yeah, good morning, Tommy. We're doing good. The temperature certainly cooled off here in central Illinois in the 60s last night, but would still love to see a little bit of rainfall. We'll have to get Jeff to take care of that.
Yeah, or as we call him, Jeffy, right? So you heard us teasing him. He's laughing back there. Yeah, he is wonderful. Well, we do need rain to grow grain, and my friends up in Minnesota have a little too much. So you're saying you'll take a little of that rain from them?
Yeah, I'd like to take some off their hands, but you know how Mother Nature works, Tommy. So, I mean, you know, our crop about 30% pollinated here in the central part of the state. Still doing okay. I think we still have good potential. Certainly have some holes and other issues to overcome from what happened this spring. And it's been kind of a strange weather year, but overall, when you look at the market performance here, just not a lot in this current forecast for the bulls to sink their teeth into, Tommy. And it's good to see soybeans bounce today, but they've closed lower 5 consecutive weeks. So certainly they're hopefully ready for a little bit of that. We've extracted a large amount, if not really all of the risk premium, I think, out of these markets, both corn and soybeans. And, you know, we're looking forward here. We're hitting the pollination period here, and just really probably in July 10th to July 14th, I think is going to be the peak in our particular area. But the forecast just, you know, continues to be mostly mild, shows some better rainfall chances, moving in the right direction. And until that, you know, turns around, we've got these funds short. We've got a trend that's lower in the marketplace, and we're really struggling to find any traction here.
Dave, we have about 30 seconds left. Refresh my memory. Give me a little agronomy class. When we go into pollination, that corn crop really likes to suck up that moisture, right?
For sure. Highest usage of the year. It's when it's, you know, determining the yield, essentially. I mean, we can talk about the number of kernels and the silking and all that, but essentially getting those, you know, the maximum kernels on that ear through the pollination period and successful pollination period is what sets you up for the highest maximum yield. And you'll need some rainfall beyond that to do it, but it also gets, if, you know, assuming that we get through that without any big weather hiccups, it's one more, you know, notch of risk away from the market in terms of lowering that yield and in turn raising prices.
Excellent. Dave, you stay right there. We're going to take a little commercial break. And when we come back, we're going to talk livestock with my friend Dave Chatterton from Champaign, Illinois. Welcome back to Market Day Report. I'm Tommy Grisafi. Let's not waste any time. Let's get into livestock. We'll shoot over to the CME Group. We'll talk live cattle. August live cattle, 184.32, down $1. Live cattle, 183.82.5, down 105. A lot of 185s, as I had said on the prior segment, when we look at the price of cattle. Feeders, same thing. A lot of them are trading at the same price, but they bounced since last time we're here. August feeder cattle, 257.60, down $1.70. SEP feeders, 258.05, down 160. Feeders, 258.25. Last but not least, hogs. Hog market, many folks are calling for a bounce. Will we see it in the next few weeks or months? Only time will tell. August hogs, 89.60, challenging that 90 mark, up 10. Ock hogs, 75.45, down 27. Deese hogs, 69.52. Just can't get in the 70 level. Let's bring him back in. Dave Chatterton, Strategic Farm Marketing, Champaign, Illinois. There's still a lot of hog barns down by you, Dave?
Not so much in our area, Tommy. I mean, we do have a little bit of confinement production. It's probably picked up in the last 5 years compared to where it had been. We have more hogs than we do cattle, but just not a lot of livestock in this Champaign County or this East Central Illinois. The fences are all gone, and it's farm and fence row to fence row.
As I like to say, we're in the bushel business. I'm sure you are too. One challenge for the hog market or cattle is I look over, and I didn't put up the board, but the bond market's trading down very aggressive today. Bonds down, interest rates up, all this noise that interest rates were going to go down, that didn't happen. When you look at the interest rates and you talk, whether you want to talk about grains or meats, how do you factor interest rates in what you help people do?
Well, I think the first thing we look at is the cost of production, and it's always important for row crop producers to know that cost of production, as you know, Tommy. And interest rates have a big effect on that. Typically, an operating note on a farm is a year-to-year basis. It's not locked in on a long-term basis. A number of our producers have been able to lock in longer-term rates on their land or their capital purchases, but not for their operating notes. And so it's a cost of production swing that really can affect the bottom line and something to plan for, let alone on the capital expenses you need for farming equipment and other things to kind of grow your operation. So it's another weight on top of of what is a very skinny margin or challenging margin environment right now for a row crop producer or a livestock or producer or rancher.
Yep. We're getting to that time when folks say, well, I'm not going to sell grain because I'm not going to lose money. But that's not true. The American farmer just took the most expensive corn crop in history, and they are currently selling it below $4. What do you say to someone who's still holding old crop corn? And they said, save the hard questions for Dave because he could handle them.
Well, look, it's not an uncommon situation, unfortunately, across the countryside. B, you have to realize you're bucking the odds at this particular point. From a seasonal pattern, corn is already past its peak, and it's very tough odds to sustain that rally going forward beyond, the 1st of July. Beans will be in a similar situation very quickly here. We don't have much to work with in terms of weather. The trend in the market has been pretty obvious. I can argue that we're oversold, but I think you have to be lowering your expectation level, Tommy, to a pretty modest bounce here without some kind of a new factor that we can't identify at this point. So unfortunately, you're swimming uphill here at this point. The clock is ticking against you. All hope is not certainly lost, but I think you have to be very realistic about your situation and what it means in terms of the calendar.
I guess the way I like to say it sometimes is the bid and ask between reality and perception, that spread is tightening up, correct?
Correct. And like I said, burying your head in the sand is not a very good solution at this particular point in the marketplace.
Dave, thanks for coming on. Dave Chatterton, Champaign, Illinois, Strategic Marketing Consultants. Well,
good stuff. Yeah.
I liked what he said.
Yeah, interesting. I mean, there's a lot of volatility. There's a lot of fluctuation. It's hard to kind of make that educated guess, but doing nothing, just not an option right now.
Sometimes doing nothing is a trade, right?
Yeah.
And it didn't work in this case. It's worked well in other cases. But yeah, I like how he did it. Nice, calm voice. You need to be working with someone who can stay calm when the pressure's on.
Steer. Don't bury your head. I like that. I think
All
that goes
right.
across the board for everything.
All right.
Tommy, thank you.